Thanks for joining us once again. This is Greg, Teslafaninsight. If this is your first time, welcome. If you're a repeat visitor, welcome back. So today I wanted to articulate that this is a follow-up show on our initial Silicon Valley Bank show. And there are a few key pieces of data that were shared. And I have to say, I'm like bombshell stunned. Now, the first piece of data, as you know, Paul Krugman has done a couple of talks about this. And if you're one of our Patreon supporters, you received a note from us articulating what Paul Krugman talked about. And so if you want to find out, please take a look at the um, New York Times today under Paul Krugman. So I wanted to, a synopsis of his comments would be the fact that um, there's a Silicon Valley Bank is an unusual circumstance. In particular, the banking at Silicon Valley Bank was mostly venture capitalists working with startups, and they're providing the capital to their startups via Silicon Valley Bank. So unlike other banking situations where you have a ton of loans and the companies run into bad situations and then the whole thing blows up, that is not an on-the-table circumstance in this case. So one can see why there's a lot of venture capital support, but there are a few different sort of commentators that have made comments that I think are really, really interesting, fascinating. The biggest one that I came across is there's a concept called hedging. So as you'll recall, we do a lot of Tesla shows focused on, well, what's going to happen with Tesla stock, either up or down based on how sales, et cetera, are occurring. And one of the recommendations we often make is when we're in a big period of information for Tesla, I usually encourage you to either liquidate or, really get on a long time horizon, or hedge if you're in a short-term situation where if you can't wait a year or two for it to come back, you could lose a lot of money. And we kind of saw that as interest rates rose this past year. So I have to say that I'm not a bond heavy person in terms of a lot of bonds traded. I've had a few savings bonds over my lifetime, but I assiduously avoid messing with bonds. And therefore, my command of pluses and minuses of bonds is mediocre at best. So I did want to point out that I have to admit, I didn't know that one could actually hedge a bond portfolio. And uh, and the second part of this, I didn't know this, is that if you have a bond portfolio and you have what's called interest rate risk, i.e., the Fed announces 6 months before they do it that they're going to be raising interest rates, what that tells you is you have a few choices. A, sell bonds early. That way, as the interest rates get ugly and the value of the bond drops, you ain't got to worry about it because you sold all your bonds, or you took a loss that was smaller. B, another option you have is to hedge. That is to use cash that you might have gotten from selling some bonds in order to hedge away the interest rate risk so you make money as that interest rate rises if the hedge is properly put in. Now, hedging is a good idea, stocks or bonds, and we often discuss it, and you'll see it among titles that we've had and shows that we've had. So that option was not exercised here in the case of Silicon Valley Bank, and actually not exercised in a lot of other cases. Your third option is to hang on to the bonds and hope that your redemption count is low enough so that you can wait out the higher interest rates until interest rates drop back down and you don't lose a ton of money. Now, obviously, the run on the bank eliminated this option from Silicon Valley Bank. And so I have to say that I put this in the title today, and I have to say I'm a bit shocked with $100 billion at stake. A donut or zero hedging in the process seems kind of stunning. And I can't believe it, but you might want to take a look at the articles out there regarding this as well. So the other thing about this is that Mr. Wonderful, as you know from Shark Tank, pointed out that the managers really sucked. And the fact that they didn't do any hedging was a sign of this. Now, another pointer, which is why all these stocks are falling right now in the sort of medium sized bank territory, is that according to Mr. Wonderful, and I have to agree, we've now entered the zone where a large number of banks have become nationalized by the government. What does nationalized mean? Basically, those suckers, or they can't lose customer money because they're going to be backed by the government. But on the other hand, if the government does come in for these banks because they weren't ready for the situation that's happening currently, they're going to make all the investors whole regardless of size of account and not just the 250K that is the routine insurance. But on the flip side, the shareholders in those banks are going to be wiped out. So if you have, according to Mr. Wonderful, and I agree, if you have a circumstance where depositors can't or don't lose money, and the investors are wiped out, that is called nationalization of banks. So he hates the idea because, um, you know, you lose an important area that people could potentially invest in. Better management means that you don't have some of the issues that are being dealt with currently in this case. So I have to agree with them. You know, people who want to invest in banks that have been nationalized, not worth it because you get wiped out and you don't get great returns. And these bankers don't know how to take risks and manage it well as good bankers should. So as a result, obviously, we're we're in this situation with Silicon Valley Bank, but the issue that's coming up is that there are a bunch of these other banks that if you look at their balance sheets, they too have liability or risk associated with having no hedge and being potentially nationalized if they get beat up by their bond portfolio. Um, I guess a question one could ask, and that definitely makes sense here, is um, can the calming influence of the government encourage investors or in folks who have their money in these banks to not make a run and grab their cash and put it in Money Center or other banks that are heavily regulated? You know, I suppose that's your option as well. Um, After I dug on this and thought on it, I have to say that I'm kind of shocked because it's fine if you have a $1 or $2 billion portfolio with no hedge, but when we're getting up to $190 billion, that's a lot of money. And so I'm kind of stunned that that might occur in this circumstance in terms of what happened. So I would say that I have a bias in my viewpoint because I'm just looking at, well, what's going on with small investors and their needs? Uh, is there a process for making sure that um, you take good care of them, and therefore that process lends itself to not having any of the drama I just described? So um, overall, I'd have to say that I'm kind of stunned right now, speechless. There are a few folks who asked me my opinion in the comments regarding what I thought about things going out. Again, I have a bias towards a consumer perspective. A, do you have money in there? B, are you going to lose your money potentially? If the answer is no, um, I don't do any investing in bank stocks because there's not enough rapid growth to force prices up nicely to make it worthwhile to put a lot of energy into figuring out how to invest them. So it's just not an area that I have any interest in messing with, and therefore have not gone deep expertise on it. The one other question that was thrown out there, and I think is really valid to ask, and we're seeing it in the markets right now, is hey, if those guys have big portfolios of bonds just like Silicon Valley and they're medium-sized banks but have not been regulated and therefore their portfolios um, being sort of carefully evaluated by the Fed, then absolutely we could definitely have more defaults going on. And that's both domestic and internationally as well. So stay tuned, folks. I think there's going to be a lot more information flowing here. I do think there's more banks that could teeter on disaster, and hopefully those investors have um, minimized the amount of cash they have in or modified their process. The one other thing that came up yesterday is that I spoke with one of my longtime Patreon supporters and somewhat advisor. And if you watch the process of a bank going under, I wanted to encourage you to try to, keep, a week's worth of expenses in your safety deposit box. It could be in gold, it could be in cash, whatever it may be. But as you can see, when a bank is nationalized, let's say it's nationalized on a Wednesday, Thursday, Friday, it could take until Monday, Tuesday before you get your money. And obviously it could go longer. So it wouldn't be a bad idea to have a little cash elsewhere. Another recommendation that we've made in the past is it's not a bad idea to have your main bank and then have a backup bank that's maybe a large institution if you small bank usually, or something of that ilk, because it allows you to not be a slave to whether or not one institution has managed their money well, and therefore you're oversubscribed to one entity. I think is definitely another thing to consider here. So, and by the way, not the same type of entity. So two very, very small banks, probably not a good idea. There are some other folks that have suggested, what about some credit unions? I think it's worth investigation to understand their risk profile and if that might not be a good backup bank to have your funds in. So, any rate, long-term conclusion here is no hedging seems to be the norm, and the hope from the bankers that prices would moderate on interest rates so they wouldn't take a huge loss on their bond portfolios. And so I'd have to say that I'm kind of shocked, surprised, but understanding the environment better is not a bad thing. At any rate, this ends our formal comments regarding this whole space. By the way, I do think Tesla has money in Silicon Valley Bank because that's really the environment the company grew up in. But I do not think that Tesla is exposed in large amounts because they have global operations and will bank themselves with other entities across the globe of where they're operating. But yes, I do believe there was some exposure there, but nothing huge because they have money moving in different venues across the globe. For example, Germany will have, sort of EU backup, and they're likely doing business with a European bank in that case. At any rate, our health tip for today, as a reminder, a 20-minute walk on a daily basis, particularly focus on mental health as the goal, or 20 minutes of exercise. Another way to do it is a highly recommended for multiple of our doctor consultants. And that's my reminder item for the day. It's actually lunchtime. I think I'm actually going to do that 20 minutes right now myself. And I hope you find that helpful in your process. At any rate, this is Greg for Teslafaninsight. Tschüss, au revoir, lehitrod, hoda hafez, zdravstvuyte, ni hao ma, konbanwa. And in Jamaica, we say enough respect, walk good man. Thanks for joining us. Have a great day, and bye for now.